If I could only use a single trading setup to withdraw hundreds of thousands a month, this would be it. These are the signs that I personally look out for when entering into a trade. 1. Time. Trade this during the London or New York kill zones, 2:05 a.m. EST and 7:10 a.m. EST. 2. Breaker block. Breaker blocks are the highest up close candles in the most recent range prior to an old low being swept. When price breaks through this high, you have a breaker block. Vice versa for bearish breaker blocks. 3. Fair value gap. A fair value gap is a 3-candlestick pattern that is caused by significant price movements, leaving behind an inefficiency or gap in the market. Here's the important part. This fair value gap must overlap with the breaker block. 4. Place a limit at the breaker plus FVG level. SL placed at the swing low, targeting a 1:2 risk to reward ratio. Let's take a look at an example of this in action. Step 1. Time. This trade was taken in the New York kill zone. Step 2. Breaker block. This is the highest up close candle prior to this old low being swept. Price broke through this high, making this a valid breaker block. Step 3. We formed a bullish fair value gap that overlaps with this breaker block, making this a valid setup. Last step, place a limit at the breaker plus FVG level. SL below the swing low, targeting a 1:2 risk to reward ratio.